Everyone's staring at the charts, trying to call the exact moment Bitcoin will take off again. You see them everywhere, drawing lines, spotting patterns, all waiting for a sign that the next big rally is finally here. But what if I told you the real answer isn't hiding in the day-to-day price action? The fuel for the next massive Bitcoin bull run is being built on something much stronger than a simple chart pattern. In this video, I'm going to break down the three core drivers that are creating a perfect storm for Bitcoin. We're talking about a pre-programmed supply shock, a literal flood of institutional money that's just getting started, and a seismic shift in the rules of the game that's legitimizing Bitcoin for the entire world. And I promise you that third driver is the one that almost everyone is underestimating. It's the structural change that makes this cycle completely different from all the others. So if you want to understand the real forces that are going to define this chapter of Bitcoin's history, you need to stick around. Here we are in late 2025, and it's been a wild ride. We saw Bitcoin blast past $100,000 and even hit a new all-time high of over $126,000 back in October before giving everyone a heart attack with a swift 25 to 30% correction. And the market feels confusing, and I see it in the comments every single day. People are asking, was that the top? Is the four-year cycle broken? It's true, we haven't seen that classic euphoric blow-off top like in 2017 or 2021. The market feels slower, more methodical, and for a lot of people, that's unsettling. But what I'm seeing isn't weakness, it's maturity. The price action we're seeing today is the direct result of huge changes that have been happening behind the scenes. This isn't the retail-driven mania of the past. This is the start of a new era, an era defined by institutional adoption and a clearer rulebook. The game has changed, the players have changed, and the potential for this market has grown in ways that were just a fantasy a few years ago. What we're seeing isn't the end of the bull run. It's the construction of its real launch pad. To understand what's coming, we have to tune out the daily noise and focus on the three pillars that are actually holding this market up. Let's start with the one we all know and love, the very heartbeat of Bitcoin itself. The first and most predictable driver of every Bitcoin bull market is its programmed scarcity. This is literally baked into the code. It's the economic heartbeat of the network, and it's called the halving. For anyone new here, the idea is simple but incredibly powerful. Think of Bitcoin miners as digital gold miners. They run powerful computers to solve complex puzzles, and as a reward for securing the network, they get a certain amount of new Bitcoin. The halving is an event that automatically cuts this reward in half, happening roughly every 4 years. Satoshi Nakamoto designed it this way from day one to make sure Bitcoin would be a scarce, deflationary asset, just like gold. There will only ever be 21 million Bitcoin. The halving guarantees that the creation of new coins slows down over time, making the existing coins that much more valuable. The last halving happened in April 2024, when the reward for miners was slashed from 6.25 BTC per block to just 3.125 BTC. Instantly, the amount of new Bitcoin hitting the market was cut in half. This is a supply shock. It's an economic earthquake where the supply of a highly desired asset is automatically squeezed no matter how much demand there is. Now, why is this so critical for a bull run? History gives us a crystal clear answer. The halving doesn't cause an immediate price explosion. Instead, its effect echoes and builds over time, usually leading to a massive price run-up in the 12 to 18 months that follow. Let's look at the track record. The first halving was in November 2012. The reward dropped from 50 to 25 BTC. On halving day, Bitcoin was trading for about $12. A year later, it had skyrocketed to over $1,000. It wasn't instant, it was a slow burn that became a wildfire. Then came the second halving in July 2016. The reward fell from 25 to 12.5 BTC. The price was around $650. Did it rally the next day? Nope. But about 18 months later, in December 2017, Bitcoin hit its then all-time high of nearly $20,000, And of course, the third halving in May 2020, the reward dropped to 6.25 BTC. Bitcoin's price was around $8,800. We all know what happened next. The market built momentum and eventually pushed Bitcoin to nearly $69,000 in 2021. We're seeing a clear, repeatable pattern. The halving happens, the new supply tightens, and as demand grows, or even just stays the same, the price is forced upward. It's pure supply and demand. The effect is delayed, but it's powerful. The 2024 halving is already in the rearview mirror. The supply shock is locked in. Every single day, far fewer Bitcoin are being created than last year, which builds a strong underlying pressure on the price. And this supply reduction also has a big impact on the miners. When their reward is cut in half, less efficient miners can become unprofitable. And we often see a temporary dip in the network's hash rate, the total computing power, as they shut down. And this can cause short-term fear, but it's a healthy process. It weeds out the weaker players, leading to a more efficient and resilient mining industry. We've seen the network hash rate continue to show strength even through price corrections in 2025, which tells us the people securing the network have strong long-term conviction. So this first pillar is the bedrock of the bull run. It's the predictable supply crunch that has kicked off every major cycle in Bitcoin's history. But a supply shock alone isn't enough. It needs to meet demand. And the demand we are seeing in this cycle is unlike anything we have ever seen before. This brings us to the second and arguably more explosive pillar. So we have the supply side locked down, but that's only half the equation. For a real price explosion, that shrinking supply needs to meet overwhelming demand. In past cycles, that demand came mostly from retail investors, people like you and me. The 2017 bull run was almost pure retail mania. In 2021, we heard the first whispers of institutional interest, but that was just a trickle. What we are experiencing now is not a trickle. It's a flood, and it's flowing through a brand new super-powered pipeline, the spot Bitcoin ETF. The SEC's approval of spot Bitcoin ETFs in January 2024 was the starting gun for a new era. For years, the biggest financial players in the world, pension funds, sovereign wealth funds, giant asset managers, were stuck on the sidelines. They controlled trillions of dollars but had no safe, regulated, or easy way to invest in Bitcoin. Buying actual Bitcoin involved digital wallets and private keys that their compliance departments would never sign off on. The ETF changed everything. It's a vehicle they already know and trust. They can buy it like a stock through their existing accounts. It's regulated, liquid, and it solves the custody nightmare for them. The ETF is the bridge connecting the massive conservative world of traditional finance to the fast-moving world of digital assets. The numbers since the launch have been staggering. Since January 2024, these ETFs have seen tens of billions of dollars in net inflows. By late 2025, the total assets held by U.S. spot Bitcoin ETFs have grown to hold well over 900,000 BTC combined. Let's put a name to this: BlackRock. They're the world's largest asset manager, and their iShares Bitcoin Trust, IBIT, has been a monster success, holding around 779,000 BTC by November 2025. Think about that. One company's product has vacuumed up a huge chunk of all the Bitcoin that will ever exist in less than 2 years. And it's not just them. Fidelity, another financial titan, launched its FBTC ETF, which has also been a massive hit, holding nearly 200,000 Bitcoin itself. Together, these giants are in a daily battle for capital, and their main strategy is to buy and hold more Bitcoin. They have to. For every dollar that flows into their ETF, they have to go out and buy the equivalent amount of real Bitcoin to back the shares. This creates a relentless one-way street of demand, and while the new supply was cut in half, the demand from these institutions exploded, and the ETFs are like giant black holes, sucking up the available supply from the market, and we're still in the early innings. To really get the scale of this, look at the first gold ETF launched back in 2004. Before that, buying gold was a pain. After the ETF launched, It made gold accessible and kicked off a multi-year bull market that saw the price of gold increase by over 300%. Many analysts believe we're watching the same playbook unfold for Bitcoin, but on a much faster timeline. This institutional rush also brings a new level of market maturity. We're seeing record open interest in the derivatives markets, with a record average daily open interest of over $31 billion in Q3 2025. This isn't just gambling, it's a sign of sophisticated institutions using futures and options to manage risk. It shows they're not just here for a quick flip, they are building long-term strategic positions. The institutional-driven demand of this cycle is structural, systematic, and far, far larger than the retail FOMO of the past. We have the supply shock from the halving, we have the demand shock from the ETFs. These two pillars alone could create a powerful bull market. But there's a third pillar, the one that truly anchors everything and makes this cycle different. It's the one most people are overlooking because, honestly, it sounds boring. Regulation. I know regulation doesn't have the same ring as supply shock, but it is arguably the most important development for Bitcoin's long-term potential. For years, the biggest barrier to adoption wasn't technology or desire, it was uncertainty. Crypto was the Wild West. And big institutions with fiduciary duties simply can't invest billions into a legal gray area. They need a clear rule book. And in 2024 and 2025, that rule book finally started to get written. The biggest regulatory event was the SEC's approval of the spot Bitcoin ETFs. This was more than a product approval. It was a green light from the highest financial regulator in the US that Bitcoin is a legitimate investable asset. But it goes deeper. In 2025, we've seen real legislative progress in the US toward creating a clear framework for digital assets. Bills like the Financial Innovation and Technology for the 21st Century Act, FIT 21, which passed the House in 2024, are aimed at finally ending the turf war between the SEC and the CFTC by defining what's a commodity and what's a security. This clarity is crucial. It tells everyone the rules of the road, which unleashes investment and innovation. This isn't just a US story. Jurisdictions all over the world, from Europe to hubs in Asia and the Middle East, are moving toward clear, supportive regulation. This global effort creates a more stable, predictable environment for a global asset like Bitcoin. We're even seeing credible reports and filings showing sovereign wealth funds, like Abu Dhabi's Mubadala, making significant investments into Bitcoin ETFs, signaling a major shift in how nation-states view the asset. This is the tectonic shift. The halving is a cyclical tailwind. The ETFs are a massive demand driver, but regulation is what turns a speculative boom into a sustainable long-term trend. It gives the largest pools of capital in the world the confidence to not just dip their toes in, but to start making real long-term allocations. Now, to be clear, this doesn't mean Bitcoin's price only goes up in a straight line. Let's be realistic. There are still very real risks out there that could throw a wrench in the works. The big one is the global economy. Bitcoin doesn't exist in a vacuum. A major global recession, unexpected interest rate hikes to fight inflation, or a significant geopolitical event could cause investors to flee to safety. A flight to cash would hit all assets, including Bitcoin. Second, there's still regulatory risk. While the trend has been positive, especially in the US, a new administration or an unexpected restrictive ruling could still spook the market. The path to full regulatory integration is never straight. The record ETF outflows we saw in November 2025 show just how sensitive the market is to shifting institutional sentiment and portfolio rebalancing. Finally, there's internal market risk. The crypto space is still known for its volatility. While the market is maturing, periods of extreme greed can still lead to over-leveraging, which almost always ends in sharp, painful corrections. Acknowledging these risks isn't being bearish, it's being realistic. Understanding the potential headwinds allows us to appreciate the strength of the fundamental tailwinds even more. So, what's the real truth behind the next Bitcoin bull run? It's that we need to stop looking at the market through the old lens. The idea that this is just another 4-year cycle driven by retail investors is outdated. The very structure of the market has fundamentally changed. What we have is a perfect storm for price appreciation. First, the predictable and unchangeable supply shock from the halving, which is creating a constant upward pressure on price. Second, an unprecedented and institutionally driven demand shock. The spot ETFs have opened the floodgates of traditional finance, creating systematic daily demand for Bitcoin that never existed before. And third, the foundational shift of regulatory clarity. A new rulebook is being written, de-risking Bitcoin and giving long-term conservative investors the confidence to finally enter the market. A programmed supply shock is meeting an institutional demand flood, all on a new foundation of regulatory legitimacy. This is why you're hearing analysts talk about price targets that would have seemed insane a few years ago. Predictions of Bitcoin reaching $150,000, $200,000, or even higher this cycle aren't based on blind hope. They're based on the logical conclusion of these three pillars working together. This isn't just another rally. This is a fundamental repricing of Bitcoin as it integrates into the global financial system. The ride will be volatile with dips that test our conviction, but the underlying drivers have never been stronger. The truth is, the real bull run is just getting started. Call to action. If you got value from this breakdown and want to stay ahead of the key trends as this cycle unfolds, make sure you're subscribed to the channel with notifications on. The market is moving faster than ever, and my mission here is to cut through the noise and give you the analysis you need. And if you want to understand how the second largest crypto asset fits into this new institutional era, click the video on your screen right now for my deep dive on Ethereum and the potential of its own ETF ecosystem. Thanks for watching, and I'll see you in the next one.